Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today. I'm the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. And speaking of reports, we have a new report for subscribers on a Nasdaq biotech trading under $1 with short squeeze potential. Over 13% of the float is short. This stock looks to have bottomed and the chart looks prime for a major move. To get our full report, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. Well, guys, stocks retreated among concern over how a Chinese ban on Apple's iPhone could impact big tech, the industry that has driven this year's market rally. Treasuries rose alongside the dollar. The Nasdaq 100 underperformed as Apple slid about 6.5% in 2 days, wiping out $190 billion in market cap. The company's suppliers such as Qualcomm and mega caps like Nvidia got hit. Apple breached the key 100-day moving average, which is seen as a bearish signal by some chartists. Amidst the risk-off push, the Russell 2000 of small caps also closed below the same technical threshold. Apple's growth story is heavily reliant on China, and if the Beijing crackdown intensifies, that could pose a big problem to a bunch of other mega cap tech companies that rely on China. China plans to expand a ban on the use of iPhones in sensitive departments to government-backed agencies and state companies, a sign of growing challenges for Apple in its biggest foreign market and global production base. In addition, Beijing intends to extend that restriction far more broadly to a plethora of state-owned enterprises and other government-controlled organizations, people familiar with the matter said. But some analysts are saying that Apple is unlikely to face a material financial impact from China's restrictions. Government officials were probably avoiding the company's products, and it would be hard for the nation to take more substantive action against Apple without affecting jobs in the country, which is where most iPhones are assembled. We expect market over the recent China news over the last few days, we believe in a worst case scenario, any China government agency iPhone ban is way overblown. As to quantify, it's less than around 500,000 iPhones of roughly 45 million we expect to be sold in China over the next 12 months. This is Wedbush Securities analyst Dan Ives in a recent note. He says here he has an outperform rating and a 230 price target on Apple. In the short term, I am looking at the 180 level. We need to fill this gap here from when it gapped down, so we'll be watching that level, the 180. But what he said is the tech giant has seen massive share gains in the Chinese smartphone market to the tune of roughly 300 basis points over the past 18 months. And with the iPhone 15 right around the corner, the tech giant has incremental momentum to gain more share. Regarding the next version of the iPhone, which is slated to be unveiled on September 12th, Ives says he is expecting some noteworthy technology enhancements related to design, as well as a $100 price increase on the iPhone 15 Pro and Pro Max. We believe now is the time to increase iPhone prices modestly, as Apple will keep the base model prices unchanged with the enhanced technology chips and battery technology in iPhone 15 Pro Max warrants this strategic pricing move. I've also pointed out that China is key to the success of the iPhone 15, given that the Pro and Pro Max models have become more popular than the baseline models. He is expecting roughly 75% to 25% split, up from historical splits of 60% to 40%. So in other words, Apple is expected to sell more of the iPhone Pro and Pro Max, which have higher margins and higher prices, and people are skewing. They want the higher end of the range. And now that September's underway, investors are also weighing in store for the rest of the year. Traditionally speaking, September tends to be a slower month for the S&P 500 and its tracking funds. According to B of A, August and September mark one of the seasonally weakest periods for stocks. Since 1936, the S&P 500 was flat on average in September, rising just 55% of the time versus 63% on average, second weakest after February. We expect market choppiness to persist near term. September, like August, has tended to be a more challenging month, and there remains a dearth of obvious near-term upside catalysts as stocks continue to digest the big year-to-date gains. As I said in my last video, my main concern is the Russell Small Cap Index because we trade primarily small caps here at InsiderFinancial.com. The chart looks to, you're getting a head and shoulders. The chart looks primed, for a rolling over, but we're trading right at the 150-day moving average, 183.65. We touched that today, closed at 184.33. This area must hold. So if it breaks down, that is a bad sign, certainly a negative for small caps. In terms of small caps that I'm watching, FUBU, FUBO had a good day. This is an outside day. I really like this. Made a new low from yesterday and a new high, closed right at the highs. This is indeed positive news. 15% of the float is short. We got a PR this morning. The company said Ryan Reynolds' Maximum Effort Channel, partnership with FUBU, announces fall slate with trailer for original unscripted comedy. For those of you who know Ryan Reynolds, he's quite the entrepreneur. He did big things selling Mint Mobile to T-Mobile. So anytime he's got a big following and he knows marketing. So that's certainly what people are paying attention to there. AXLA up 39%. This is a long COVID squeeze play. Shorts are getting crushed. Just waiting for the next PR to drop. No resistance overhead. We talked about this more on InsiderFinancial.com in relation to Bioxytran, the next AXLA squeeze, AXLA. But right now, AXLA continues to squeeze again. So we talked about this one. We got the squeeze last week at the end of August. Pullback, retraced all the way to 20 cents, making another move here. TTOO, almost 10% of the float short. Green Day today. We had news after the bell. The company is to participate in the Gilmartin Group Emerging Growth Company showcase. So getting updates from the company later this month, which is a positive sign. This one has spikeability, spiked up to 70 cents. We're half of that, 34 cents here, but again, Green Day today, so certainly looks like we can get some more squeeze before the weekend. Certainly interesting setup there. NVOS got exactly what I was expecting this week. I talked about this in my earlier video this week. I said it was going to break out. 24.99 pivot high. We broke through there, got above 35 cents, but we are pulling back here. So I said the other day, use a trailing stop on this one. We break out 35 cents. This one's really going to start climbing, so that's what we'll be watching here. But again, we're getting consolidation here. Could go either way. So again, please use trailing stops. None of this is financial advice. Just trying to help you guys as much as possible. CHPT, 19% of the float is short. We had a green candle on a disappointing earnings report. Dip buyers came in. We closed right at the high of the day. So again, bullish today, bullish action in spite of the 10% drop. Path, PATH, 10% of the float short, getting an earnings breakout today, broke above the 150-day moving average of 1610, closed right near the highs of the day. I'm looking for more continuation in PATH before the weekend. Next up is Novavax, NVAX. 42% of the float is short. This one is creeping higher. We could see a big squeeze. I really like the chart above $10. This is what I'm paying attention to here. We are trading above the 150-day moving average of $8. But again, we got some resistance here above $10. We get above that, close above there, and this one's going to start squeezing. We could easily see $14, $15 in a matter of days on NVAX with a bullish close above $10. Lastly, guys, is VFS. I warned everyone last week about it when I called the top. I should have gone short, but I don't like shorting these low floaters. That's suicide. It's retraced. Play green, guys, not red, but I think we could get a major move back higher in VFSS. Question is, does it go below 15? Does it go below 10 before we get that squeeze, when the shorts start covering and booking profits? So I think we could easily see a squeeze. Like I said, this one's rallied from $9 all the way to just under 95. We could get a similar type move. VFS, again, play green. It's a pure momentum play. Don't go in dip buying. Like I said, it could go a lot lower. We could be dip buying it at $5 and then it squeezes to 20. I mean, there's going to be an opportunity, but you just don't want to be averaging down. That is just a fool's errand and is really stressful trading. We focus here on the KISS system. Keep it simple, stupid. And what we're trying to do here, guys, at InsiderFinancial.com is put stocks on your radar that have the potential for outsized moves. As I say repeatedly, there are always opportunities each day in the markets. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We are looking for those momentum plays that have catalysts. It's all about finding momentum before it happens and riding that wave. That's what we do here at InsiderFinancial.com. And right now in this market, guys, don't be greedy. Focus on singles and doubles. Don't go looking for that triple-digit runner or whatever. It's not there right now. Focus on, singles and doubles, and you will do well in this market. And to get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, and lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com with your email. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at InsiderFinancial.com and unsubscribe. But our main focus for Friday is our report on a Nasdaq biotech short squeeze play trading under $1 a share. The best part about this stock is that it's a name our subscribers know well and has been a past winner. For our full research report, click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion. It is meant for informational and educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Have a great Friday, traders. Bye-bye.